Hi, everybody. I'm Radko Albrecht. I'm the founder and CEO of Bitbond. At Bitbond, we focus on providing a token generator, and therefore, I have a background in tokenization. And today, I'm going to talk about, from meme to mainstream, the rise of tokenized assets, which in my mind is a very exciting topic, and I want to tell you a bit more about that. Meme coins and tokenized assets started with Dogecoin. Dogecoin was launched in December 2013, and it was the first meme coin that ever existed. The initial idea of Dogecoin was to bring cryptocurrency in a very playful way to the people. Bitcoin obviously already existed and has been quite actively traded on exchanges back at the time. And Dogecoin was just a fun idea. It was a fork of the Bitcoin blockchain to make people familiar with the concept of a cryptocurrency without them having to pay for it. In fact, a good friend of mine programmed a mobile app that was called Doge Rain. And with Doge Rain, you could shake your phone, and everybody in your near proximity could catch Doge coins for free. This way, I obtained thousands of Doge coins, but I didn't make any money off of it because at some point I threw away the phone and all my Doge coins were gone. Because the Doge coins at the time weren't really worth anything. However, that has changed, and Dogecoin turned into quite a considerable investment. Right now, Dogecoin ranks number 9 by market cap across all of the cryptocurrencies and tokens that exist. If you had invested early in Dogecoin, you could make a return of thousands times your initial investment. So it is quite exciting from an investment standpoint, and it's delivered quite remarkable returns. Dogecoin, however, is its own chain. So like I mentioned, it's a fork of the Bitcoin blockchain because tokens that exist on other chains weren't really a thing at the time. They were initially invented also on top of Bitcoin. When Bitcoin was invented, it was, of course, a form of digital gold or a digital internet money. However, in, I think, 2012, 2013, some people came up with the idea of so-called colored coins, where you would send a nominally very small amount of Bitcoin to another address. However, you would add metadata to the transaction in order to say, well, these coins are somehow marked, and they can represent another asset. They could be a meme coin, they could represent shares, or whatever you wanted to represent. However, on Bitcoin, this functionality wasn't really very efficient, and so not a lot of people used Bitcoin in order to issue tokens on top of it. However, the idea was born. Then other developments led to the fact that tokenization actually became a thing. First of all, ICOs were very important. In 2016, 2017, there was a big wave of initial coin offerings. A lot of them at the beginning happened on Ethereum. Ethereum itself, of course, did a big ICO, probably the biggest one at the time. And then after Ethereum was launched and was functional in 2016, 2017, there were a lot of really big ICOs happening. And then there was one other missing piece, which is the secondary trading. Back at the time, there were only centralized exchanges, and they were very restrictive in terms of what kinds of tokens they would list. But then decentralized exchanges started to evolve. They were existing already in 2018, 2019. However, it took until 2020, 2021 that they really took up pace in terms of transaction and trading volume. On the chart, we can see how it grew almost exponentially in 2021, 2022. Today, decentralized exchanges are really important. They are about 25% of the trading volume of centralized exchanges. So they have really grown to substance, and probably at some point they will be equally important as centralized exchanges. And both of these things, a lot of ICOs that happened and trading on decentralized exchanges is a path that leads to tokenization because both of these components led to the fact that it became way more popular. Where do we stand today? Right now, there's around about 3.5 million tokens that exist that are being traded on decentralized exchanges. So that's a very substantial number. And among the different blockchains that you can use in order to create tokens and list them on decentralized exchanges, the Binance Smart Chain or BNB chain is by far the most popular one. Over 44% of those tokens that are on DEXs are actually on BNB chain, and it has been dominant for quite some time. So while Ethereum as the first chain for tokens that was really popular has existed for way longer, it has been surpassed by BNB chain for quite some time. However, BNB chain is not the only one. Right now there's a lot of growth on Base chain, which was launched just over a year ago, and Solana, which existed for quite some time, but Solana this year in particular had been extremely strong with launchpads like Pump.fun coming into the world and really skyrocketing the token growth on that chain. And now guess what? Out of those 3.5 million tokens, a lot of them are meme coins. It's not easy to say how many exactly, but based on the data that is available, it's safe to say that 95%, maybe even more, of those 3.5 million tokens that are being traded on decentralized exchanges are meme coins. Meme coins are very easy to launch, and they are a fun investment, and it's simply something that people apparently like. Otherwise, the traction wouldn't be where it is. One other good thing besides the investment aspect, which I'm going to talk a little bit more about in a moment, is actually that meme coins drive technological innovation. Those people who launch meme coins, in many cases, are relatively sophisticated crypto users and know what they expect. So besides being a paperless proof of ownership, which is a very common theme around tokenization, meme coins also make use of some of the more advanced features of tokens, such as programmable payments and related features. For example, if you launch a meme coin, typically what you do is you create a liquidity pool on a decentralized exchange, because that's how you ultimately list a token on a decentralized exchange. When you create the liquidity pool, you want to signal to investors that the liquidity is going to remain there. So you don't do a rug pull, you don't pull out the liquidity and then scam your investors. But in order to do that in a trustless way, what you can do is you can create something that's called a token locker. You can lock up the liquidity pool tokens for 10 years, 20 years, and with that, give a very strong signal to the investors that the liquidity is going to remain there. And so token lockers came up in the context of meme coins. So meme coins were driving this innovation. So this is one of the good things that meme coins have actually delivered. Besides, and frankly, that is obviously one of the most important reasons why meme coins are so popular, they keep delivering pretty strong investment returns. Here is a list of the largest meme coins by market cap. Dogecoin remains to be the biggest one with over $15 billion in market cap. But also, if you look at the list, there's 4 or 5 more that have a market cap of more than $1 billion. So they are really, really big, and they are being traded very, very frequently. And the reason that they are being traded so much is because they did deliver quite substantial returns over the past years and also recently. If you look at the year-to-date returns of different token categories, then meme coins are leading the pack by a big margin, and they delivered January to June over 500% of a return, something that no other asset class within tokens has delivered. And that is the most obvious explanation why meme coins are so popular and why so many people want to trade them. However, and now we come kind of to the next part of the talk, which is from meme to mainstream. Meme coins are not the only asset class that is popular and that is big amongst tokens. We typically categorize them into these 6 use case areas, and the biggest one by far are stablecoins. So while meme coins in aggregate have a market cap of something above $50 billion, stablecoins are already at over $170 billion. So they are more than 3 times as big as meme coins. And there's plenty of use cases behind stablecoins, obviously. One thing is payments, another is remittances. Of course, a lot of traders use stablecoins in order to move money between exchanges. So stablecoins is a very big use case driven by tokenization other than meme coins. Another huge use case not to ignore are platform tokens and DAO tokens. So tokens of decentralized autonomous organizations. every DAO needs a token that serves as a governance token. The people in a DAO would typically vote on causes and projects that they want to do, and in order to be able to vote, you must have a governance token. So every DAO, at the moment when they get set up, they need to launch a token. Other areas that are really big are real-world assets, also an area that is a lot in the press right now, because some of the bigger traditional financial institutions started to issue real-world assets like tokenized funds, tokenized commodities, tokenized bonds, US treasuries, etc. So this is another area. It's an area that is right now still smaller than meme coins in terms of the aggregate market cap. However, there's a good chance that actually this area might surpass meme coins at some point. And the same is true for security tokens, which also have a relatively small market cap right now, but which are very likely to grow way beyond meme coins and that market cap. So as you can see, while meme coins are really big and were a very early phenomenon in tokenization, there are other areas that are growing and that may eventually surpass meme coins. At the same time, I don't think meme coins are going to go away. They are such an important phenomenon in the token market that they are definitely here to stay. And 360 billion is the aggregate volume of tokenized assets right now, which I think is already pretty substantial. At the same time, this number is expected to grow many, many magnitudes of order higher. There's one projection by the World Economic Forum that the total value of tokenized assets is going to grow to something like $16 trillion, which is a huge number, and that will represent around about 10% of the global GDP by the year 2030. Of course, we don't know whether it's exactly going to be this number and this percentage. However, the underlying trend is clear. Everything that has considerable value will be represented in its proof of ownership by a token at some point. And this is exactly the development that we're seeing. And we at Bitbond support this. If you want to create your own token, whether that's a meme coin, whether you would like to start your own stable coin, whether you want to tokenize the shares of a company, then you need to launch your own token. And one way to do that, obviously, is with our product, with Bitbond Token Tool, where you can simply go and create your own token without having to program the smart contract behind it. Because that's the main advantage. Tokens come into existence through a concept called smart contracts. You need to know the underlying programming languages in order to be able to launch them. And we have made that super easy by providing you with a user interface where you can simply do that without having to have any coding skills. And Token Tool has already significant traction. Over 5,000 tokens have been issued through it, and it's growing really fast along with the overall tokenization trend. So if you have interest in tokenization, please come and see us. We're here to help you, and thank you very much.